We start the week off with gold game film Frank Holmes. Gold prices are sharply lower. We got Frank online. He's going to help us find out why. Frank, how are you?
Good to be back, Alex. I'm a little down from down under. I was in Hong Kong and Australia, and I just got back late yesterday.
That's right. And how was the Minds and Money show in Hong Kong?
It was subdued. They had a great lineup of speakers, lots of content, which is important for people to get together and connect. I saw some significant, I call money managers, that were looking for bottoms and opportunities, but they're all very cautious. That's the big approach, and they're very cautious because of China. China's flash PMIs, came out, and it's below 50, showing that the economy is slowing down. But they say bad news is good news, and immediately China's coming out with some stimulus. So I think from that end, it was important to get a flavor for what people are thinking and the emotions of feelings, which really just don't come across in text.
Well, Frank, you come back to lower gold prices this week after 2 weeks of gains. Now, it seems as though analysts are pointing towards Friday's afternoon's comments regarding Janet Yellen and obviously rate hikes, and this morning with renewed strength in the US dollar. Now, are you seeing one or the other leading gold downwards, or is it a mix of both?
I think this is a combination, that no matter what she says, the market moves in trepidation. Remember that there's all these quant funds that are wired to make decisions immediately in the gold market, in the bond market, based on words from a Yellen. There's not you and I having a conversation and making a decision. Word choice triggers trading activity in the capital markets.
Let's take a look at opportunities and threats. We're going to start with opportunities and that US dollar. We're seeing calls that the US dollar may be overvalued, maybe topping out. Is that what you're seeing right now?
Yes, I think the dollar has had a great move, but what was important is to recognize is that exports are slowing down. And we're starting to see a lot of negative. Citigroup has a bank, what they call sort of a surprise index, and a lot of the surprises are actually negative. So the idea of rates rising in America, the dollar would just rip, and the stock market would plunge, and it would plunge more in dollar value loss than anyone could imagine compared to gold falling to $1,000 or $900 an ounce. The wipeout in the overall stock market would be significantly greater.
And continuing with opportunities, we're going to look at your SWOT report this morning, where you mentioned a TDS report and reserves, gold mining reserves. 3 years in a row, they've been going down. Now, we know there's already issues with exploration and lack thereof. Discoveries haven't been anywhere near where they should be. Now, is this all setting up for, a gold run sooner rather than later?
I think it's a big challenge for gold mining companies. And the other thing that's really interesting, Alex, is that when we've had a slowdown by the majors in exploration, it's usually the juniors that are picked up in that exploration, but there's no capital for them to go and explore high-risk exploration opportunities. So therefore, we don't see a whole lot of new gold supply coming on for the next 10 years. Unless gold was to go to $3,000 or $4,000, would it justify such a risk? So I think it does bode well that supply is going to shrink over the next 5 years, while reserves continue to shrink.
And switching over to threats, we're going to take a look at Fed Chair Janet Yellen and her comments, whether they're hawkish or dovish. It seems like the seesaw just goes either way for gold prices. Now, is this just going to continue every time she says something that's perceived in a certain way up until they finally raise those rates?
Absolutely. There's a whole theory on high-frequency trading is just based on price and volume. But I'm trying to comment to your listeners is that the high-frequency trading programs now are also word choice, that they've analyzed and they do regressional words. So let's say Yellen says A, B, and C, immediately computers turn around and go back over the past 180 trading days and say, well, historically, what does this mean? And then they start putting on a trade. Usually it's through the futures market. So I think it's important to recognize this short-term noise can be very disruptive to your overall portfolio, especially if you're trying to be a trader. But I don't think it's all that negative, when you sit back and understand what it's taking place. The world is still being run by monitors. There's no strong fiscal policy of deregulation, streamline of regulation, tax-free zones, etc., to stimulate what you had pre-2008. So you're going to live with this low interest rate scenario, and it's just different. It's that new normal, they like to call it. And then gold, I think, is basically an important asset class. But between now and when we get the big holiday season taking place in Ramadan, we're going to live with this seesaw action.
All right, Frank, let's take it over to your touchdown pass for the week. Now, we know there's some interesting data points coming out. Is that going to be part of it?
Well, right now, it's a 3-point shot at the buzzer. It's March Madness time. It's March Madness. And gold markets are making it go mad, especially you're going to say who's going to win. But I think it's the ISM numbers coming out Wednesday. I think ISM is the American equivalent to PMI, and it'll be important for taking a look at a global PMI. What does this mean? What is that direction? Because China is the second biggest GDP in the world, has gone negative again. So what does this mean to global? Will America be able to hold up the weight of the world? This will be an important number. And then right on the back of that, will be coming out Friday, will be payrolls. And that's an important factor for Yellen and what she looks at in moving interest rates.
Excellent, Frank. Thanks for joining us today.
Good to be here. Good to be back in North America.
And thank you for watching this edition of Gold Game Film. As always, comments or questions are always welcome at newsfeedback@kitco.com. Have a good week.